Hello, everyone. Thank you for joining me again. I am Nancy Nnaji. Just a few days ago, the Central Bank of Nigeria came up with some policy decisions, and I hope that you know that those decisions affect you and I and your businesses. First, now let's understand what those decisions are. First, the monetary policy rate was set at 18.75%. This is the benchmark interest rate used by central bank to control inflation and economic growth. A higher rate indicates a more restrictive policy aiming to curb inflation but potentially slowing down economic activity. And we've seen the central bank on this road for the past 1 year and a half. Secondly, the cash reserve ratio was kept at 32.5%. This represents the portion of deposits that banks are required to keep with the central bank. For example, if a bank has 100,000 naira, the bank will keep 32,500 naira, in this case, which is 32.5% with the Central Bank of Nigeria. So it means that a higher ratio means that banks will have less money available to lend to you and I, leading to interest rates that are higher for borrowers and reduce liquidity in the economy. Lastly, the liquidity ratio was set at 30%. What that means is that it specifies the minimum amount of liquid assets that banks must hold relative to their total deposits. It ensures that banks can meet short-term obligations without facing liquidity issues. Now, let's explore the impact on various stakeholders. For businesses, high interest rates can increase your borrowing costs, potentially limiting investment and your expansion plans. For banks, cash reserve and liquidity ratios may reduce their ability to lend freely to you. For small businesses, they might face challenges in accessing credit, hindering their growth prospects. For savers, you might benefit from a higher interest rate. In this case now, savings rate will be 5.6%, which is 30% of the MPR of 18.75%, which I mentioned earlier. So overall, these policy measures can influence economic activity. But in conclusion, the job of a central bank also is to find the right balance between these policy tools that is crucial for promoting economic activity as well as taming inflation. I'll see you all again on our next video. Follow for more videos like this. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV.